Hello, good morning. It's Wednesday the 14th. I'm FX Blue, and if you're just tuning in to play Where's Wally, I'm in London. So yesterday the Bank of England's Financial Policy Committee published its report. We hear from the committee twice a year on the risks to the economy, and their brief is to protect and enhance the resilience of the UK financial system. They performed several stress tests on the outcome of the pandemic on the financial market and its participants. And the outcome was to decide that with immediate effect, the bank should no longer be banned from paying dividends. You may remember the dividend restriction was put in place back in March 2020 to protect the capital base held by the banks. The expectation was that it may come under a degree of pressure as their business clients went under during lockdown. Another idea at the time was that if they couldn't pay out funds to shareholders, they might be more inclined to lend a little more freely. But those wily little bankers only played ball there once the government stepped in and agreed to guarantee 100% of any defaults. Classic banking. But anyway, those restrictions were removed yesterday, and we're back to business as usual for bank shareholder dividends. The report noted that growth in the property market has been driven by structural factors as well as government support. This was probably a nod to the low interest rate environment, which has seen mortgages offered at less than 1%. However, an accompanying comment suggested that the Bank of England is not complacent about the risks of overheating in the property market. So I guess if they say that, it's going to be all right then. Today we have inflation data for June. Forecasts there are for 2.2% year on year. That's up from 2.1% in May. And core inflation, which strips out the volatile items like fuel and seasonal items, is expected to remain at 2%. Yesterday, sterling was driven lower by the dollar. We fell to about 138, and we opened this morning slightly higher, around 138.25. Over in the US, CPI inflation data for June hit 5.4%. This wasn't much of a surprise, but as you'd expect, it certainly has fueled the tapering debate even further. We've even had some Fed members suggesting that now is the right time to start tapering, while others have maintained their view that tapering should begin before year end. We've not heard from Powell yet, but chances are he'll stick to the script, happy to sit tight for the time being. Indeed, many bank analysts have reported that they don't believe the reading will change the Fed view that inflation is transitory. And the wider view seems to be that the economy needs the comfort and security of a few more months of support. So for now, we wait and see. Wait to see whether Q3 will see the peak in inflation and growth in the economy that some are forecasting. In the market, as you'd expect, the dollar rallied on the data. We saw the dollar index challenge 92.80, and euro dollar fell to its lowest level since April. We touched 117.70 there. We opened this morning just off that low, but just short of the 118 level. Right, so that's it from me. Off to the office. If you see me out and about on this, give me a wave. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.